Welcome back to another video, everyone. So today I want to talk about kind of a good short-term hedge against inflation. Now, for those who don't understand all the details or what's going on with it, Microsoft is buying Activision. To sum it up in short, Microsoft is buying Activision for roughly $95 a share. Now, Microsoft shares will not be spun off to people who own Activision because that would dilute shareholders. Rather, Microsoft has so much cash, they're just taking a big wad of cash and plopping it down. So sometime in 2023, assuming this gets fully approved, Microsoft will pay out to Activision shareholders roughly $95 a share. Now, the unbelievable thing to me is if you look at the current Activision share price, last I looked exactly as I kept it up on my phone here, $78.60. And at one point it was as low as $75 a share. Now, for some who may not know, Warren Buffett has been buying the crap out of this because he literally is saying, it's a no-brainer. $95 a share, and the current share price, as I just looked, is $78.60. I already did the math on my phone. That's roughly a 20.8% or nearly a 21% gain from the current share price now. And pretty much the two things that only kind of somewhat suck about it is one, you have to wait a whole year before you're going to get paid out. And two, there is some risk associated with it. Shareholders already approved the deal, but the Federal Trade Commission also has to approve it. So that is the risk associated with this. Do they find that Microsoft is trying to basically suck up too many companies and become too big and activate basically antitrust laws? Or will it get approved? Obviously, Warren Buffett has weighed the risk out, and he thinks that it's just too juicy to resist. Warren Buffett clearly thinks that it's going to get approved, and I mean, when he was buying quite a few shares too, for him it was gonna be like, he bought close to 75, so it's like a 25% gain at that point. But I mean, look, here's the thing. Not only is it a really nice, like, short-term hedge against inflation, because, I mean, look, if you have for a whole year, let's even say, again, really bad inflation that's a like 7% rate, if you just plop a bunch of money into Activision right now, and this deal goes through with Microsoft, that money will be turned into 20% more. That definitely beats out 7%. It's 20% arbitrage in the positive direction. I mean, it's definitely a beautiful little short-term hedge against inflation. But not only that, for those of you who are concerned about where the market is going, and again, this is not everyone. If you have long-term convictions in stocks, that's fine. But if you're concerned about where the market is going and you don't want to play in the stock market anymore because you see things, coming up in the future here due to whatever it may be, due to inflation, due to the fact that you think there's going to be a recession again. Well, stocks don't tend to do well in this sort of atmosphere. However, it doesn't matter what kind of atmosphere we have in the stock market, because if the deal entirely gets approved for Microsoft acquiring Activision, you get that roughly $95 per share paid out to you no matter what. No matter what the market conditions are. So let's recap. If you not only want a really good hedge against inflation in the short term where you can make about 20% on your money if you're just willing to wait about 1 year, and if that wasn't enough for you and you also don't really trust the market conditions right now and where the market is going for the stock market, you could even think of this as literally liquidating your portfolio if you really don't know where the market's going, and you could plop all that money into Activision and most likely make a 20% return at the end of the tunnel. Now, again, there are, of course, risks involved. You have to weigh the risk as this may not on a federal level get approved. Now again, clearly Warren Buffett thinks that it's going to, as he already weighed this risk out. Mergers happen all the time, acquisitions happen all the time, and more often than not, they go through without really much of a hitch. If you want to dive a little deeper into what the risk could really be when it comes to this, with it not getting approved, is this. On a federal level, as shareholders have already approved it, on a federal level, they could try to fight it or deny it because basically there's antitrust laws that try to make sure no one gets too big or tries to acquire everything. And if you do look at this, Microsoft is trying to position themselves as like the big dog when it comes to gaming now. And on a federal level, they could look at that as, well, you've acquired too many companies and you're trying to like almost kind of position yourself too well to the point where it may not be fair to competition and we need to step in. But I mean, honestly, there's plenty of competition out there still. Who cares if they acquire Activision? Sony's still going to be fine. Nintendo's still going to be ripping. I don't see why this acquisition deal would be shot down on a federal level. And I think that's why Warren Buffett has already weighed this out in his mind, and he thinks that it's essentially free money. Normally when companies are acquired like this, and shareholders are paid out for it, that stock is normally way higher, so the arbitrage is not as high. For example, when Salesforce acquired Slack, the company Slack, if anyone remembers that, I was a shareholder in Slack before that acquisition was made, and I made good money on that. I didn't even have to wait for the months and months of that acquisition to take place and for me to get paid out. Because the share price was only like, at the time, like, it was so close to what Salesforce was paying out. It was only like 50 cents to $1 off, and at some points was right at it. So I just sold out. Why wait? It gave me the money immediately to play with, and I basically got all the money I was going to get paid out anyways. However, there's a clear level of positive arbitrage here where you could make, based on current share price, about 20% on your money. And that sort of opportunity does not come across too often. Okay, so I know I said recap, but let's do a super quick recap again, just so that everyone understands, because I sort of went on another tangent there. Again, let's talk about the risk involved on a federal level, as shareholders have already approved this. It could be shot down. I just don't see that being likely, and nor does Warren Buffett, which he has weighed the risk and has put billions into this because he sees the huge opportunity for positive arbitrage, or essentially free money of 20% plus made on your investment. Now let's talk about the two really good things that could come out of this if it's approved. One, really good short-term hedge against inflation. Even if we have another really high inflation rate of like 7%, I mean, making a 20+% return on your money easily outweighs any level of inflation that we would have in the next year. Now, two, if we have really bad market conditions coming up in the future and you believe the market's going in a really bad direction, or we're still in a bear market, or we're headed for a recession where stocks don't tend to do too well, guess what? If you invest a good amount of money, or all of it, or whatever your risk tolerance is, into this deal, it doesn't matter what the market conditions are, and it doesn't matter how poorly the stock market's doing. If we're in a bear market, if there's a recession, you're getting paid roughly $95 a share, no matter what the conditions are. Seems like a win-win to me, and certainly worth your consideration. Okay, everyone, that's all I've got for you in this video, and I will see you in the next one.